Hi everyone. Thank you. It's Friday. Yes, another Friday. Are you guys so excited that we are here and we've made it to another Friday? I'm so excited. It's been a really good week and I am happy to be here with all of you. We're here for another Car Talkin Friday. This week's topic is going to be a little about kind of jumping back to what we were originally talking about for people who were learning about down payments last week. So now we're going to talk about, now that we kind of understand what the down payment is, etc., now we're going to talk into like actually applying for the loan. So how to apply for a home loan and the top 3 things that the lender is going to look at when you apply for a home loan. So that's going to be really cool. We're going to talk about that today, and we're going to hopefully educate you guys a little bit more so that you understand. I had several conversations this week with people who weren't sure about really what they needed to be prepared for when it comes to purchasing a home or applying for the loan, and what all that pertains. So that's what I wanted to talk about today. We're going to try to make this quick again. So we're just going to jump right in. Okay, so the top 3 things that you need to be aware of that the lenders are going to really look at when you apply for a home loan. Number 1, and these are not in any particular order, guys. But number 1, of course, is going to be your income. Guys, you have to have a job and you have to report your income in order for the lender to know and verify that you make enough money to pay your monthly mortgage payment on time and every time. So if you have a job, and I know there's a lot of people out there who have a job and they may not report every dime they make because of whatever their job is, but guys, you have to report your income, and you have to pay your taxes, because the lender is going to ask for certain things. They're going to ask you to provide tax returns. They're going to ask to see your bank statements. They're going to ask you to provide proof and explanation for all of your jobs and your sources of income. And if you're self-employed, the lender's going to look at your adjusted gross income. So you can't really get around this. Now, there are some programs out there, but we're not talking about those today. Today we're talking about just applying for a typical home loan, not any specialty program. So you have to have income, and your income has to be enough to qualify you for the type of house that you want. We all would love to have $1 million house, but we all don't make enough income to get that sometimes. So again, the lender is going to really want to make sure that you have enough money to pay your monthly mortgage on time every time. Your employment history is going to be reviewed, as well as your assets. So not only do you have to have a job, but it is possible that the length of time you've been in your job will make a difference as well, right? And your assets, if you have assets, investments, things like that that you could easily liquidate and turn into cash, then that also will be looked at. So there's a lot of things here that we're looking at that you really have to be prepared for. It's not just as simple as saying I make $60,000 a year or whatever. It's like, okay, well, show it to me, prove it to me. How long have you been with this employer? If you've been jumping employers a whole bunch, that might not look as favorable for you. And if you're self-employed like myself, you sometimes have to provide a little bit more information. So the lender's just really wanting to make sure that you can prove that you have enough money to pay for the payment of the loan that you're going to take out. Okay, so income is super important. The second thing the lender is going to look at is your debt. So we all hate debt, we all hate bills, but most of us have them, right? So debt, really the lender is wanting to see how much debt you have and how well you've been paying these debts consistently. So not, oh, I'm going to pay this bill this month and I'm not going to pay it next month, but no, are you paying every bill that you have on time consistently? And how much debt do you have? Like, are you overrunning yourself with debt? And you know, what does that look like in the overall picture? And this includes all debts, guys. So we're talking about student loan debt, we're talking about credit card debt, we're talking about your car loan. Basically any like minimum monthly payment obligation that you have is considered a debt. And they look at all of this, and what they do is they compare how much debt you have to how much income you have. And that is called the debt to income ratio, DTI. So the debt to income ratio is super important. And what they look at is they say, okay, does this person have so much debt that they barely have enough income to pay all that debt? Or does this person really not have that much debt and they have plenty of income to add a mortgage to that? So we get a lot of questions all the time about, well, what can my DTI be? How much debt can I have compared to my income to qualify for a home loan? And that's kind of a difficult question because there's so many different programs and every lender can be different. And next week I might have a special guest who's going to talk about this a little more, so stay tuned. But I did print a little chart. There's a website called better.com. I was trying to go online and find a chart that would really kind of show people like what debt to income ratios are good or whatever. And because every loan program is different, I just thought I would show you guys this, and I'll have it linked below, or I'll put it in the comments so that you guys can see it. But basically this chart says that if your debt to income ratio is 36% or less, meaning your debt monthly payments is 36% or less than the total monthly income you're getting, then you probably are in a good position. You're probably going to be able to qualify for a decent rate with a decent loan type, etc., etc. If your debt to income ratio is between 37 and 50%, then you might be kind of pushing it. A lot of the loan programs will allow you up in the 40-ish range percent, but that is going to be coupled with all the other factors they're looking at to determine if that's going to work for you. And then also, if you're above 51%, little red, then you may need to work on lowering your debt so that you can qualify for the best possible rates and things that are out there. So this isn't a God-given no flexibility chart, but this just helps you understand. Like, generally speaking, if you go look at any financial advisor online or any mortgage company, they're going to tell you if your debt to income ratio is less than 36%, then you're doing good. And if not, you might want to work on that a little bit. So, you know, that's just how that picture is done. So they take your income, they take all your debts, they divide your debt into your income, and then they determine what that percentage is, and that's your debt to income ratio. Obviously, the lower your debt to income ratio, it's possible the more house price you can qualify for because you have more room to pay that debt. Does that make sense? So, you know, we can talk more about that in a different video and really dive into debt to income ratios, but it's important that you understand, one, that your income is super important when applying for a home loan. Two, your debt is super important, and they use those two together to determine your debt to income ratio. Now, the third thing, and probably one of the most important things that we talk about, is credit. So income, debt, and credit are all big things that they're going to be looking at when you apply for a loan. So, you know, you cannot get away from the credit people. They monitor everything that you do. And if you don't know, because we're going back to the basics, your credit score is a 3-digit number based on the data found in your credit profile or your credit report. So you may hear people say, I have an 800 credit score, or I have a 620 credit score. This is the 3-digit number they're referring to, and it's all based on what the credit bureaus pull together on your report, and then it's assigned to you this number. That's a very high level explanation. We're not going to get into the mud in it, but this basically will give the lender an overview and a reasonable idea, I would say, of how likely you are to repay your mortgage. It's all about statistics and your actions. So if you're paying your bills on time and you have a healthy debt to income ratio and you're not overusing your credit cards, etc., then you're likely going to have a better credit score. If you have way too much debt, or you're missing your payments, or you've had a repossession or whatever, then your credit score may not be that great. And all of this impacts how well the lender is comfortable with approving you with their money that they're going to give you. So the other thing that you need to think about is like if you've had delinquencies. Again, delinquencies would be like truly not paying your bills on time for a length of time. And then things like bankruptcies or a foreclosure, things like that all can impact your credit, and the lender's really going to be looking at all of that information. So one thing that you really need to be doing is kind of the opposite of the things I just said. So you want to make sure you're paying all your bills on time. You don't want delinquencies, right? You want to make sure your credit card balances are kept low. It's okay to have credit cards, and a lot of times the history from your credit cards, if you've had them a long time, is really good as well. But you want to make sure that you're keeping that percentage of utilization. So if you have a $10,000 limit on your credit card, don't go spend all 10,000 of it. You know, maybe just spend 2,000 or 2,500 and keep that under that 30%, 36% ratio. That's going to help you to establish good credit. So keeping your debts managed, limiting your applications for new credit. If you're going to be applying for a home loan, guys, if you listen to anything I say today, please, to the children in the back of the room, if you are thinking about applying for a home loan, do not apply for new credit. Do not buy a new car. Do not buy a new four-wheeler. Do not buy anything on credit. Do not finance anything until you have talked to your loan officer to make sure that these purchases and credit utilizations are okay. You don't know how many deals are busted because someone has made a big purchase in the middle of their transaction. So that's a huge no-no. So please make sure you're not applying for a whole bunch of new stuff, because every time you apply for something like this, it goes on your credit report. And if you're applying for a whole bunch of stuff, the lender's going to say, why is this person all of a sudden trying to get a whole bunch of credit? So we want to make sure that we're careful with that. And then just making sure that you know what's on your credit. There's a couple websites, if you're curious, we can talk about offline. But there's a lot of ways to maintain your credit and to know what your credit is. And there are some websites that are better than others. So if you have questions about that, let me know. And if you know that your credit needs a lot of work, we have partners. Justin Murch is a guy that I partner with, and he can help you with your credit. He can help you get on track. He knows the mortgage business, and he knows what needs to happen. So what have we learned today? The top 3 things in my eyes. My lender may disagree with me next week when he's on, but he just told me I had good information, so I'm going to trust him. But the top 3 things that lenders are going to look at are your income, your debt, and your credit. And when it comes to your income, that can include your job history. It can include tax returns and bank statements and all of this stuff. Your debt is going to include everything that you pay out monthly, so be careful of that. And they're going to look at how well your history of paying your bills and things are, so your credit. Those are the top 3 things, guys, that if you're thinking about applying for a home loan, that you really need to consider. And if you know that you need to work on one of these areas, if you have too much debt, or if you know that your credit utilization is a little off, it behooves you to start working on that now, so that when you do apply for the home loan, you can qualify for the most qualified type of loan and interest rate possible. Because the better all of these things are, the better your income, the better your debt to income ratio, and the better your credit, all equals to the better interest rate and the better loan program that you're going to be able to get. So it does matter. Now, I'm not saying that you can't still qualify for a loan if some of these things are off. None of us are perfect, right? And so a lot of people, you can still qualify. But if you want to really put yourself in the best position, we recommend that you really take a look at all these and work with us so that we can help you to know where you really need to focus. So I know you guys have heard me talk in the past about really what I like to do is help people strategize for their buying and selling needs. And this is a prime example of strategizing to become a buyer, to get a home loan. Even if you already own a home and you're going to sell that one and buy a new one, you're going to have to go through this process again. And so it's super important to make sure that you're aware of all these things and that you do your best to put your situation in the best possible profile components that you can, so that when you apply for a loan, you're making it easier on yourself, you're getting a better rate, your loan officer is going to love you, and everything's going to be wonderful. So I hope this helped some of you. I know for some of you this is remedial because you already have been through this process or you understand, but there are a lot of people out there who really don't understand what it takes to apply for a home loan. And for those of you, I hope that this video was informative, and I hope that you will always remember that you have to focus on your income, your debt, and your credit if you're thinking about applying for a home loan. So that's all I have for today, guys. I hope you have a wonderful weekend. If you have questions about any of this information or anything we've talked about so far in the past few weeks, please let me know. In 2 weeks, we're going to have a special guest from a home warranty company come talk to us about home warranties. Next week, we're going to have a special guest from a loan perspective to talk about this part 2 of what we just talked about today. And we're going to have a lot of expertise, guys. My goal is to make sure that everyone is educated and you have the best possible information out there to set yourself up for success. That's what we're about here at the Scott Noblett Realty team. So anyway, stay positive, bring positivity into your life, and positivity will come your way. Bye, guys.